We'll touch base because it's earnings season, talk more numbers, and Sharan Bansal, who's director at Skipper, joins in with a quick perspective on how the company has performed. Good to have you, Sharan. It's been a strong quarter for you. What would you attribute that 20% jump in profits to?
Well, actually, our PAT growth has been higher than 20%. We're at about 37% in PAT growth. Our net revenues have grown approximately 20%. So we've been saying, of course, we've had a strong, we continue to enjoy a strong order book and strong prospects in the power transmission and distribution sector, as well as the water business that we are in. So either the 20% top line growth and the plus of 30% bottom line growth is in line with our corporate targets.
Okay, let's talk about the margins that have dipped this quarter. What will help your margins stabilize in the second quarter?
Realistically, our company's margins and revenue numbers need to be seen on an annual basis, because if you compare the first quarter numbers to the last quarter of the closing financial year last year, you'll notice that the revenue is approximately, it's always that the quarter 3 and quarter 4 are very revenue heavy, and that's where most of the orders get executed. Quarter 1 and quarter 2 typically are light in terms of revenue execution. So, which is why the margins, although are in line with our overall annual margins, but realistically our margins have to be looked at on an annual basis. It's very difficult to gauge it quarter on quarter.
Okay, the expansion of the Polymer Pipes division continues. How much manufacturing capacity are you looking to add there? What is the current capacity utilization?
Last year we've had a very healthy growth in our polymer pipe business. We've achieved almost about a 60% plus growth last year. We continue to expand in our polymer pipes business. It's a fast growing business for us. In line with that, the company's board yesterday approved setting up of a new manufacturing unit in Northeast, in Guwahati. This will be dedicated for polymer fittings. It will manufacture both UPVC and CPVC fittings, and it will cater to the fittings requirements of all our pipe plants across India, all our pipe plants. So we are quite excited about this new plant, and we certainly see the overall polymer pipe business as all our new pipe plants achieve full capacity should be consistently growing at 40 to 50% a year.
Okay, can you also take us through the total orders that you have bagged in the first quarter, and can you split it up in terms of international and domestic orders?
Q1, the order inflow has been approximately 200 crores, out of which was 50-50. 50% was approximately exports and 50% was domestic.
What is your current capacity utilization overall, and where do you see it headed? Because that would directly impact the total volumes produced.
We've been consistently achieving 90% capacity utilization in our engineering products business, and looking at our strong order book, which is approximately 2x of last year's sales, we see no problem in consistently achieving 90% over the next couple of years as well. In our polymer pipe business, because we've set up new plants recently, so in the new plants we're obviously operating at a lower capacity utilization, but certainly that should improve in the coming years.
Okay, and in light of the current macroeconomic setup, what kind of revenue and margin growth can you guide for?
Our revenue, as I mentioned, that we've been consistently delivering plus of 20% growth over the last couple of years. Last year was slightly lower on the top line. We achieved 15% growth because of the impact of lower commodity prices. But this year we see absolutely no problem in delivering 20% plus growth. this year as well as next year, looking at our order book situation.
All right. Thanks very much, Sharan, for joining us and giving us those details on your earnings. We wish you all the best for the future. Thanks very much again for joining in. 160 on Skipper, flattish with a negative bias as we speak. That's time out then on Market Sense from Kamya and myself. Thanks very much for watching the show. It was a